So if you're watching this video, you probably have some interest of what's going on in the banking world as well as the real estate industry. It's been highlighted almost daily that we're going to have an announcement from the Bank of Canada with regard to the overall benchmark rate. Now this announcement was set for January and it was actually pushed to today, March 2nd. So I wanted to make a quick video highlighting what my thoughts are and what I think is going to happen in the future. Hey there, my name is Kyle Duke with Rebel Real Estate, and I've been selling real estate full-time for the past 8 years in the Durham region and the surrounding areas. Now, if you're somebody that's watching this video for the first time, thank you for clicking on it. I would really appreciate it if you could support me by subscribing to my channel as well as liking this video. And if you're somebody that is already subscribed, thank you very much and welcome back. So for starters, let's talk about the Bank of Canada increasing the overnight lending rate. So for starters, what is the overnight lending rate? The overnight lending rate is the interest rate that these banks are using to borrow and lend within each other in the overnight market. Now, this is the first time that the Bank of Canada has increased the overnight lending rate since 2018, which is about 3 years ago. So here is a chart dating back to 2017 showing the fluctuations we've seen in the last 3 years with regard to the Bank of Canada overnight lending rate. Looking at 2017 to 2019, you can see it went from 0.5% in 2017, which we're at today, to 1.75% in January of 2019. Now, if we look at 2020, when COVID became a big issue in the world, we can see that the overall benchmark rate dropped from 1.75% down to 0.25% and was fixed at that number for 2 years. Now, the bank has been mentioning that they're going to be increasing these rates to fight against inflation. And in the announcement today, they understood and mentioned that the inflation is actually heating up faster than they anticipated, and they had to make some changes sooner rather than later. In addition to that, the banks are considering the Ukraine situation and the fight against inflation. With Russia's attack on Ukraine, it's putting upward pressure on commodities such as fertilizer, natural gas, and oil, which this country is a big producer of. So from what I'm hearing and reading online, this is going to be a first series of many hikes for 2022 to try and tame inflation, which we've seen it at its highest point in decades. So what does this mean for buyers and sellers? So for buyers and for sellers, it's definitely going to impact how much you can afford. Now, it's not a huge increase off the hop, but it is over time, especially if these series of rate hikes do take place in 2022, it will slowly start putting downward pressure on the approval amounts, which in result should have an impact on the sale prices of homes. And even if you are a seller and you have a bunch of equity in your property, you're still gonna have to go through the same process just as a normal buyer would, which again is gonna affect your approval amount. So as an example, and these are rough numbers, but if we're looking at the overall benchmark rate, which was at 0.25%, now increased to 0.5%, it's going to come out to being about $12 a month on your mortgage and $144 a year for every $100,000 you spend. So if your mortgage payment was $1,500 a month buying at $500,000 and now you purchase a property for $600,000, your mortgage is going to go up $12 a month and $144 a year. So will this have an impact on the housing prices? It's tough to say whether it's going to have an immediate impact, but we're already starting to see slow signs of a cooling down period. We've already seen more inventory hit the market daily, almost double and triple some days. The amount of showings on properties have dropped around 30%, and the number of offers sellers are getting on their properties has definitely gone down. Now, whether this is buyers taking a back seat to see what's going on from the Bank of Canada's announcement today, or with the Ukraine situation and inflation, there's a lot of people that have taken a step back to see the overall impact. But I really do believe we are starting to see a small cool down period because buyers are starting to recognize that we've hit our ceiling and there's more inventory coming out daily. And now we've already seen some properties being sold conditional, which we haven't seen in years. And we've actually seen properties not get any offers on offer night. And a big reason for that, I think, is there's more inventory. Buyers are not being forced to buy properties that don't present well or show well, or have major issues because there is just nothing to choose from. So they're recognizing that we don't have to spend all this money on these crappy properties. We can wait for the next one to come out because there's more stuff hitting the market every single day. I think it'll be very interesting to see what happens in the real estate market over the coming months. But if you are a buyer or a seller, please feel free to reach out at any time. Remember, if you are either a buyer or a seller, there are no bad questions. The more you know, the more you understand, the smoother the process is going to be. My name is Kyle Duke with Rebel Real Estate. Thank you very much for taking the time today to watch this video. If you have any questions, please feel free to reach out at any time, and I'll talk to you soon.